Hello everyone. This is the pre-market report video for today, March 23rd in the Indian stock market in terms of Nifty and Bank Nifty. But in this video, I like to discuss more about the last night's Fed interest rate hike and its related content. Regarding that event, we can divide that into two. One, Fed interest rate hike and its official report press release. Then the second, it's Fed Chairman Jeremy Powell's press conference with the media people. And in this section, I'll discuss first what market expects and then what he said in detail. In terms of whole press conference video, I'll provide the link in the description below. If required, please have a look. It's a 45 minutes long video. Anyway, let's start. First, regarding the official report press release, Fed did increase the interest rate by 0.25% to 5% as most of us expected, which is the highest US Fed funds interest rate since 2007. Then in the statement, they mentioned that they kept the peak expected interest rate for the moment to 5.25%, which was same as the previous guidance in the last two FOMC meeting, which means we may expect at least one more rate hike this year. So that's the summary of the statement. As soon as the report was released to the press, all three US major index increased marginally. However, as soon as the interview press conference starts, the market started to fall continuously and closed the day on the day's low. Before going into the summary of what is said, first I like to highlight what market wants or expects. First of all, market expects to reduce peak rate hike to 5% from 5.25%. Second, they expect some relaxation of 2% inflation target. Third, market wants the Fed to use or start to use the other tools to control the inflation rather than blindly increasing the interest rate. Fourth, some hard confirmation that all the depositors' money in all the US banks will be safe. Fifth, they want the Fed to start to reduce the interest rate in the second half of the year. So, 5 expectation, repeating in short. First, peak interest 5%. Second, inflation target relaxation. Third, other tools to use to control the inflation rather than the interest rate hike. Fourth, depositors' money safe confirmation. And finally, start to reduce the interest rate from the second half of the year. Now, coming to his reply, he said for the moment he is going to keep the peak interest rate target same as February month guidance, but if required, he will raise it further as much as needed to control the inflation. That's a first very hawkish comment. And then the reporters asked what if it creates more banking crisis or more economic problem means. He replied, it's too soon to analyze or to quantify the impact of banking crisis, but he acknowledged at present it was contained. And he criticized Silicon Valley Bank management for their failure. In order to prevent that in future, he said that his team is working on new banking regulation under the leadership of Vice Chairman. Now to the second expectation or question, he said no, he is not going to change the inflation target. He thinks 2% inflation target is very important for the price stability and the sustainable living standard. Moving on to the third question, he said interest rate hike is the effective tool and it's working. So they want to continue to use it rather than exploring other tools. Now regarding the depositors' money safe assurance, he said let's assume it's safe and we got the tools to support it if required means, but that doesn't necessarily a blanket insurance. This is the very important one which made the market instantly negative. In simple words, he said that Fed will support as long as it's capable of. And for the final question regarding the reduction of interest rate in the second half, he immediately said market is thinking completely wrong about everything. He expects at the end of this year the peak interest rate to be at 5.1%. Then in the end of 2024, he expects it will be around 4.3%. Finally, in the 2025 end, he expects the interest rate to return to 3.1%. To be frank, this is the nightmare statement. Above 3% interest rate for the next 3 years. I know in India, we are used to the higher interest rate, but for US, it's a complete disastrous. Anyway, additionally, he stressed about the importance of PC inflation as their tool is now projecting the 2023 year-end inflation to be around 3.3% compared to the earlier projection of 3.5%, which he welcomed but he thinks it's not enough. To summarize, he is expecting to keep the interest rate for longer term to cool down the PC inflation. Is it all negative in his speech? No. He clarifies that he expects there will be no recession in US on 2023. US economy will grow at 0.9% and he expects at the end of 2023 unemployment rate will be only at 4.5% from the present 3.6%. And also he mentioned this is just a present day status, but if the inflation cool down faster means then he will reevaluate the situation about cutting the interest rate earlier. Anyway, because of his press conference, all three US major index crashed. In the end, Dow Jones decreased by 1.62%, S&P 500 decreased by 1.65% and Nasdaq down by 1.6%. Regarding VIX, it increased over 4% and moved about 22. And all the tech stocks closed 1 to 4% down. Again, there was a disaster in the small banking stocks. However, in the post-market offline, all started to improve. Despite all this, oil increased over 1%. At the time of this video, Brent crude oil is trading near $76 per barrel and WTI crude oil was traded at $70 per barrel. Then about Indian areas in US market, it's a complete disastrous. Only ICICI Bank was down marginally of 0.6%. All others, Wipro, Infosys and HDFC Bank crashed near or over 2%. Regarding SGX Nifty, at 3 am Indian Standard Time, it closed at 17,087, which is roughly indicating 90 to 100 points gap down to our spot Nifty today. So that's all about the global market. Coming to India specific, there was a couple of stock specific info. First positive news, Hero MotoCorp announced that they are going to raise the selected bike price by about 2%. I kind of think this as a positive news since it improves the profit margin. However, US raised the interest rate which will force the RBI to raise the India's interest rate, which will not be good for auto loan and to any auto stocks for that matter. So let's see how this is playing out in the market today. Then the second news which is not so positive is regarding HAL. Indian government proposed that they are going to sell 3.5% of HAL stock. This is kind of short-term negative since it increases the liquidity of the stock. As a summary, today is more of negative since there is no positive news to push the index in the upward directions. Additionally, US market down, SGX Nifty down, there is a bank and IT weakness, all kind of indicating negative market today. However, surprisingly at present 5:30 am Indian Standard Time, US future market opened and is trading marginally positive. Coming to technical, on the daily chart, Nifty forms a bearish spinning top candle, Bank Nifty forms a bearish doji candle and both of them were just neutral candles. Anyway, first let's discuss Nifty in detail. Compared to March 9th to March 20th, Nifty corrected 1000 points. I mean from 17,850 to 16,850. Then now in the last 2 days it was in the pullback phase and it is expected to continue at least till 17,450 as long as Nifty is above 17,000. It mainly depends on Nifty crossing and closing above 17,200. However, Nifty will likely turn into a sell-on rally only after breaching 16,800. Here please note 16,800 not 17,000. Since at present Nifty is stuck in the range of 16,800 to 17,200. Then in terms of Bank Nifty, today it found the resistance at 14-day moving average. So the Bank Nifty will gain momentum up to 40,800 only if it crosses the 40,200 mark. Then about moving average, because of the last 2 days bullishness, Nifty moves above the 5-day moving average and 10-day simple moving average. Thus as a summary, from its all strong sell signal, it improved to just sell now. However, technical indicator summary, it's still a strong sell signal. Then for Bank Nifty, moving average summary is same as day before yesterday, sell signal. However, technical indicator summary improved from strong sell to buy signal now. In case of RSI, Nifty value is 41 which is sell. However, for Bank Nifty, the value is 46 which was a neutral condition. From options engine open interest, for Nifty, significant call options unwound at 16,900 to 17,100. More number of new call options were added between 17,200 to 17,500. And significant quantity of put options were added at below 16,800 and between 17,050 to 17,150. Then based on options interest, Huge number of short straddle is still present at 17,100 and the nearby maximum put option open interest is present at 17,000. So 17,000 is the immediate support and hoping the support to hold at least. On the higher side, 17,200, 17,300 and 17,400 all are the immediate resistance and 17,500 is the strong resistance. Then about Bank Nifty, from change in open interest, the story is more or less same as Nifty. From 39,000 to 40,000, some call options were unwound. Then more new call options were added at above 40,000. Then based on overall options open interest, now 40,000 got the significant short straddle. So 40,500 is the support to look out for and 39,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the videos. It will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.